Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are after market close on Tuesday, August 5th. We're going to take a look at Lucid today. Now, I had already decided to do this Lucid video today, and I'll tell you why in a moment, and completely forgot that earnings was happening. So consider my surprise when I log in to do the video after the market is closed and I see it cratering and going, oh, right. So obviously at the moment, the reaction to earnings is not a positive one. It's about 4:12 p.m. Eastern time at the moment. So we'll see how that changes as the market digests. They hear more, they get more info. I don't think here on the Webull setup, there's not even specifics on this yet. So in other words, I'm sure it's out there. It's just not on Webull yet. So in any case, the reason that I thought it was worth coming in to do a Lucid video was because it's getting back into my buy zone. And after this reaction to earnings, it may be even much more securely in my buy zone. Now, as we can see here, just a few days ago, came in and came really close to this 231. The low on this day is 232. Now, keep in mind, it filled that gap at 234. So this gap that it had left when it jumped up on this Uber robotaxi news is filled. So to the extent to which you feared that gap, maybe graciously, it filled it quickly. However you want to think about that. But that's done and that's all set. And now it's back in my buy zone. So a few videos ago, when we were looking at this gap and the action post the big plus 36% day, I spoke about this buy zone that I have at 231, and it stretches down to about $2, a little bit below, right? You have 198 here, but to me, I feel pretty comfortable accumulating in the 230s and then accumulating more in the 220s, more in the 210s, and then going really heavy right around 2. And I didn't know at that time if we would get the chance. But Lucid being Lucid, boy, do we have a chance. And so it's going to be somewhere in that range right now. It's at the moment flirting with even getting into the teens, right? The 2 teens. So we'll see where we come in, and that will sort of dictate how heavy I want to go in to Lucid starting tomorrow. But for all intents and purposes, in my mind, this is in a buy zone for me. Now, that may change if I finally read the news from the earnings and it's just a disaster. But, I mean, they have had some decent catalysts lately. The chart's been looking good. So if that all stays relatively even and it's like, it wasn't super earnings, but I don't really know who expected super earnings, I feel okay with that. Now, my buy zone that I have, like I said, 230 toe dip, 220s, a little bit heavier, 210s really start picking up speed, and then if we get around the $2 level, that's when I'm going to go in the heaviest. Now, my stop loss would be sort of one of two things. One, obviously, if we lose this double bottom at like 198. So if we see a slip to like 196, 195, I would feel like we are, all-time low territory at that point. We see 193 here, so maybe could stretch it to there if my risk tolerance felt strong enough. But, I would really get pretty questioning at that moment. And the other thing that I would look at, let me just take these off for the moment, would be what it's doing at the EMAs. In other words, in the 190s, if it gets there, is it showing some consolidation strength? Is it showing, is it bear flagging? Is it showing the potential to make a motion toward the 183, which it's back below now? Or is it just constantly catching resistance off of that 8 EMA? That's this white one here, right? Constantly catching resistance off it, making new low. That would be sort of my subjective moment. So it's not a specific price point of 196 or 192 or something like that, but it would be how is it reacting through these EMAs? All things on balance, if I can't really tell, then I would be somewhere in the 196 to 192 range for a stop loss and just say like, that sucks. I probably lost a pretty good percentage chunk at that point. but it was a risky move, and so I played with the capital that I set aside for risky moves, right? So there's that. We do see at the moment it's actually recovering right now, so pretty interesting to see maybe what's happening here. We're getting that second 10-minute candle in, but it did get down in the 2 teens on that candle, so we'll see if there's actually any strength here. But that's my plan, and I just wanted to sort of lay that out there. Accumulate in the 230, well, at like 230, and then sort of really start to scale in a little bit more at 220-ish, and then, you know, my heaviest buys being in the 210 range, and then, you know, in the $2 range. That's where I would be like, okay, here's the rest of it. And not the rest of my account, to be clear, the rest of my high risk, high reward money. So I have, you know, sort of portions sectioned off for risk tolerance, if you will. So and that helps me kind of gauge things. Now, like I said, well, I guess I flipped over here, so let's do this. I have a Patreon. My Patreon is a gift. And the reason it's a gift is because nothing is paywalled. So there's about 20 pieces of content up here right now. And none of it costs anything to consume. Not because it's free or invaluable, or of no value, I guess I could say, but because I don't want people to be restricted from it. If they want to consume it, I want it to be there for them. And in the future, if I do introduce tiers, which I probably will, it will just be a way for you to toss a few shekels into there to support the work, sustain the work, but it won't unlock any content for you, and it won't wall off anything from anyone else. So I'm Walkabouts with Dan on Patreon as well. So head on over there if you would like to have some more content to consume. And also, if anything were to happen to this YouTube channel, which I don't anticipate, but if it were to, I know it happens sometimes, I want us to already be somewhere else so that we don't have to scramble to try to find each other wherever we are online again. Okay, so back to what I was saying before I mistakenly flipped to a different screen. On the EMA side here, you know, the other thing to note is we have bearish crossover, 8 crossing below the 21. Now that could change, right? It's pretty fresh. It could bounce off. You know, I'm more of the mindset that we are going to see some activity like well into the 220s, 210s. And then, like I said, I'm just getting, you know, ready to scale in. So I don't have any qualms about this going down to that, you know, heavy buy-in area in the $2 range that I talked about. But from an EMA perspective, it's below the 183 now. It was not able to hold that against the weight and gravity of this gap. And so, you know, we know the long story here of Lucid, right? It is this. Now, can it turn the tide at some point? Maybe. But look at how well it's responded off of this $2 level, right? This is why that's my buy zone. I mean, you're talking about huge run-ups that you get from this. Even this one, which doesn't look like it's that big, if you bought it in around 2, you could have ridden that all the way up to close to 3. Right? That's a huge gain in a pretty short period of time. It's not Palantir money, right? But you're talking about, you know, buying shares at $2 versus 100 and something, or I guess you could have bought it back when it was $6 or whatever. But in any case, that's my view on, you know, Lucid on the Webull side of things. Now on the Thinkorswim side of things, we had this trigger and fire, and that gave us this little bit of a roller coaster. I'm wondering if that roller coaster then, you know, makes the full swing and shifts south, right, and gets down here. If it does, for the month of August, which are these levels right here, that put trigger, which can also act as support level, is, you know, just below $2. So again, you know, it gives me a little bit more confidence that maybe if we get to 2, it doesn't just crumble through it. Maybe, you know, it has some support strength there, still some buying pressure there. And if it does get jumpy for some reason, call triggers all the way up at 293 though. So, I mean, that's a long stretch away for it to then get really jumpy with a +1 ATR up to 444. But that just shows you how volatile the stock is at the moment. But, you know, we'll see how that pans out. And you have, you know, this big shelving right down here, right? This is why I would start to come in, you know, much heavier in the 2 teens, right? Because 215 is where you have this huge shelf right here. But obviously that gave way significantly, even recently. So, that's my plan. That's what I'm looking at. We'll see how the rest of this earnings shakes out, but I just wanted to share because we've been talking about Lucid a bit. So I figured I would sort of like close the loop for now. Not to say I'm not going to continue to make videos on Lucid. I will probably, but you know, I didn't want to sort of, you know, leave this story unanswered in terms of like, hey, this is a great buy zone. Will it fill this gap? That was sort of the last questions that we had. I think I was doing the video like here, maybe here. And boy, did it fill that gap. And boy, did it do it quickly. And yes, that buy zone to me. Oh, one thing that I should mention. It's sad that I'm putting it this late in the video, but I'm a little just burned out today. But in any case, you see the big buy zone here, right? This is where, like it's said before, it's had some big pushes from here. The one thing to be very cautious about, depending on your risk tolerance, but the one thing I'm being really cautious about is to just watch for any of these walls to completely give way. So at some point, what you start to wonder is, yes, great buy zone, like 210 to 195 or whatever. At what point do the buyers not show up anymore? You know, this has happened a few times already. So I'm just super late to the game buying in, and all the buyers who are really interested in accumulating heavy around 2 have already done so, and they're just not willing to continue to pour in more money to outpace the sellers. Then that's where you could see just an absolute bottom fallout from the chart perspective, right? Just taking out of it any catalysts or anything like that. But from a chart perspective, just the bottom absolutely falling out and going like, where'd that support at 2 go? I would just, you know, caution that that could absolutely happen. And so if it happens, it generally is like a swift, very clear giving way in an area where a shelf should be, and it's just whoosh, right? And if it whooshes, then you're down into this really flimsy, low-level shelf here, right? It's not even as good of a shelf as you have here at $3 if you get down into, you know, heavy into the 190s. So there's been a little bit of pressure pick up there, buying pressure pick up there, but I would just be cautious and know that that bottom can fall out really quickly. And if it does, you just want to be on top of it. So maybe think about setting stop losses at a certain level. If you do start to get some gains, maybe some trailing stops for at least a portion of the shares or something. But I'm not your parent, so I'm not going to go on and on and on about this. Do what you want, but there are ways and methods by which you can mitigate some of this risk, especially if you don't sit there and stare at charts all day, every day. All right, folks, so I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.